do you think we're going to get a Bitcoin spot ETF approved before the next halving?
Great question. I saw a really interesting Twitter thread from somebody, and I wish I could give him credit. I apologize that I don't recall the handle off the top of my head, but he was the one who made the observation that this scandal ironically increases the chance that a spot ETF is approved. And that I've said, look, that's a double-edged sword, because the market makers in ETFs create naked short positions. They're relatively small, certainly a lot smaller than the naked short position that FTX built, which the revelation yesterday that when people bought Bitcoin, apparently FTX didn't actually buy the Bitcoin. They just took the money and put a ledger entry into their own ledger for Bitcoin IOUs, right? That is literally paper Bitcoin. That is what happens with ETF market makers as well, but they're not allowed to just do it for 100% of their exposure, right? It's just a few percentage points around the edge. But this is one of the things that is a double-edged sword about ETFs. However, an ETF would certainly solve a lot of the leverage problems that were created by the GBTC premium. And this I'm going to get into the weeds a little bit here, but by the SEC, I wrote a Newsweek piece about op-ed piece in June, I believe, about this very issue. By the SEC approving the GBTC as the only way for folks to be able to buy Bitcoin, to be able to get exposure to Bitcoin through their brokerage accounts. For 6 years, there were no competitors. And it was a closed-end fund. So when you came through these bull markets, what ended up happening? The closed-end funds, because there is a finite supply, end up trading at a huge premium. Well, that premium went to a peak of 175% at one point. And it was very easy for the traders to come in and clip a risk-free arbitrage by arbitraging that 175%, right? This is a trade. This has been well covered by the industry press, that a lot of people put on a lot of leverage on the risk-free arb trade. And then when the SEC approved Valkyrie, which was the second fund, that was in, I believe, January 2021, you can go back and look at the premium in GBTC starting to gradually collapse because there was a competitor. Now it's not an ETF, but ETFs don't trade at premiums or discounts like we see the closed-end fund trading at. And it's just been wild volatility and 175% premium and now, round about 50% discount. This is not friendly to investors. And my critique of the SEC is that if investor protection really is the mission, having a closed-end fund that trades at that kind of volatility relative to spot is not a good idea. It would have been better to have multiple versions of it. And the ETF, I do think, would solve a lot of the problems. I think I saw someone else tweet out, can you believe all of the problems in crypto trace to ultimately all of the leverage problems in crypto trace ultimately to that GBTC premium. Let's hope that gets solved so that we don't have an even bigger problem going forward.